Welcome to MFIS TV, where we help you build, sustain, and grow wealth. Tonight's episode, we're talking about long-term care, something I'm so passionate about. As many people don't know, but my father, when I was 11 years old, lost his battle to cancer. And at the same time, he needed long-term care help. But God blessed him that he had a sister who helped him out, and he went to a facility for a short period of time. So I understand the importance of long-term care better than a lot of people have. And how I could hit upon a family member as I was 11 years old, needing with the help of seeing my dad go through waves tonight. And one of the most important things is making sure that our family members have the most important care. So tonight, we're going to give you guys some lessons and understanding just a little bit better what long-term care is. Now, first of all, we want to let you guys know what long-term care is helping you with your bathing, eating, dressing, and even with if your mind goes with Alzheimer's and dementia, to help take care of you if something happens to you inside your home with a nurse coming to you, or at a facility where you might go to assisted living home or a permanent living home or anything else. So that's what long-term care does. Now you say, Jason, how do someone gets long-term care pay for it? Well, there's three basic ways you can pay for it. The first way you can pay for it is through your own pocket. And what I mean by this, if you have some money, you pay for it once you get long-term care, and you pay for it out of pocket. Now, the downfall of being self-insured and paying for it for yourself is the expensive long-term care. Out here in the San Francisco Bay Area, the average facility is $90,000 a year. So if you ever get dementia or Alzheimer's, God forbid, but in a couple of years at almost $100,000 a pop, that can dwindle down your wealth a lot. Number two, which most people think is going to happen, is Medicare is going to take care of it. But they don't understand the dynamics of getting on Medicare. To be on Medicare, you gotta be broke, dead broke. Which means this: if you own a home that you've been working so hard for and paid it off or close paying it off, you can't qualify for it. If you have some money in your savings, you can't qualify for either. With being able to qualify for Medicare, you have to sell off your home. You have to use everything, all liquid assets you have in investments. You have to dwindle it down till you have nothing else to pass on to your heirs. And with that, then you can finally qualify for Medicare. And remember, Medicare don't always give you the best facilities. So if you're old and you want to be in the Rolls Royces of the nursing facilities, more than likely being on Medicare than not. And there's a lot of restrictions on being Medicare, such as, which is the most popular one I heard before, one hurt my heart was, there was a grandmother who wanted to see her granddaughter at a wedding. She lived out here in San Francisco. The wedding's in Boston. Medicare can only hold your bed for 7 days. After that, you're on your own. So she had to go to the wedding and rush back for she don't lose her bed. Now, the third and most popular one I totally believe in that everybody should do is look at long-term care insurance. And there's two different types of insurance policies. There's a lump sum long-term care insurance, and there's a payment plan long-term care insurance. So a lump sum is this: you get $100,000. It's an easy number. You just buy yourself $200,000 in long-term care. At the same time, that $200,000 can actually be used if you ever pass away. That money can be passed down to your heirs. Or if you ever need that $100,000 for liquid cash, just in case something happens, because we never know when a rainy day is going to happen, we have that cash. Or number two is we can pay premiums on a recurring system. Just like any other insurance, you pay month by month until we have it. Now, the great thing about that is that a lot of times, depends on your tax situation, if you own a business, or depends on how much you pay for health care every month or year, that money can actually be tax deductible. So, and that's a great thing about it. And remember, a lot of people say, well, what's the cost of it? On the cost for a monthly plan, you're saying right now, it's going to be cost between $2,800 and $4,000 a year. But it really depends on inflation rider, premiums, return of premiums, when you want to pay it off, so on and so forth. There's a lot about it. So find you somebody who knows long-term care insurance. Now, if you have any other questions, please give us a call at 510-229-7608, or hit us on Twitter or email us at MFISFinancial@gmail.com. Now remember, we here at MFIS TV is here to help you sustain, build, and grow wealth. And I hope your wealth is growing with us. Have a good night.